Dollar General shares are trading lower after the discount retailer trimmed its annual profit forecast. This comes after Dollar Tree also narrowed its outlook yesterday. I want to bring in Sucharita Kodali, who is the Forrester Research Principal Retail Analyst. Sucharita, great to have you on as always. So which of these names is better for investors?
Well, they're both challenged for different reasons. We have Dollar Tree just announcing some pretty major executive shakeups, and that's never a good thing for a publicly traded retailer when the CEO has to step down for health-related reasons. Dollar General is also challenged. Both of these companies have issues related to the consumer just not being confident. They're heavily dependent on SNAP consumers, lower income consumers who are most stretched right now. So they're both challenged. Dollar General also tends to be more situated in rural areas, which makes it more competitive with players that are doing well, like Walmart. So if I had to pick, I'd probably say that Dollar Tree has a little bit of an edge, also because it's embarking in a broader tiered pricing strategy to try to bring some of its price points up.
Certainly. We also heard interim Dollar Tree CEO Mike Creedon address tariffs during the company's earnings call. I want to play a clip and get your reaction on the other side.
Back in 2018 and 2019, when we last dealt with this issue, we were able to mitigate the majority of the potential impact by negotiating lower costs with our suppliers, changing product specs or pack sizes, or dropping non-economical items. Today, all three of those options are still at our disposal. On top of those, we now have detailed plans in place to shift supply sources for most of our products to alternate countries. And multi-price gives us additional flexibility on our product assortment.
So it sounds like tariffs are already weighing at least on the minds of so many executives in retail right now, but how much will it really weigh on what investors and what analysts have come to expect of their performance too?
Well, I think it really depends on whether or not both of these dollar stores are able to diversify their supplier base, and in particular also diversify their mix. The more they get into consumables, which is the category that the lower income consumer is leaning into right now, there is less of the exposure to some of these tariff-laden markets. It is in the discretionary goods. It's all of the paper products or some of those items that are in seasonal categories that really have the biggest weight. And this is something that will affect anybody in this sector. I look at companies like Party City too, that are very vulnerable to some of these tariffs, particularly from China, because it's going to be very hard to find alternate suppliers because so much of that merchandise is coming from China right now.
So, I mean, it's not like the dollar retailers, Dollar Tree, Dollar General can really go out and put price promotions out there the same way that some of the other in the retail landscape can. So what are the levers that they can pull in this interim period? And it sounds like there could be some changes that really spell out shrinkflation potentially, even if we're looking at assortment and pack sizing as well. What are some of those levers that they can pull in the interim period?
Yeah, you called it out correctly. I mean, the truth is that they don't have too much leverage from a pricing standpoint, and that necessarily is going to cut into earnings. And I think that could even be worse in 2025. Because tariffs aren't there yet for them to have the softer speculation now is likely for other reasons related to the fact that consumers are just pulling back on discretionary items altogether. Now, what can they do? A lot of it is tricks with promotions. It's bundling products. It is having larger pack sizes so that you force consumers to purchase 2 or 3 of an item. And then there's a little bit less clarity around, kind of maybe what the per item cost is. So those are typically what we see when retailers have to have promotions, but they're not able to necessarily just discount an individual item altogether. There may be some introduction of some sort of loyalty program or some benefits that come from consumers that may shop more. That's typically a lever as well. And these companies have, for various reasons, not necessarily been big players in the loyalty space up until now.
Sucharita, thanks so much for taking the time here with us today. Appreciate it.
Thank you.